Did you know that in the world of crypto trading, market makers often play dirty and engage in practices like wash trading to fake high trading volumes? But hold on to your hats, because some companies are shaking up the status quo, creating a more transparent and open environment for investors. You should be somewhat familiar with this project, as we mentioned it in our last video. So without further ado, let's dive deeper into Reform DAO and explore their mission to tackle the market's biggest challenges head-on and offer some fresh solutions to a problem plaguing the crypto market-making industry. Starting with what a DAO is, it stands for Decentralized Autonomous Organization. Picture it like a town square, where every decision is put to a vote by a diverse crowd of token holders, creating a democratic organization powered by blockchain technology and guided by smart contracts instead of old-school hierarchies. Aside from its DAO structure, Reform stands out with its dynamic trading engine. It's the beating heart of their operation, driving liquidity and efficiency within the DeFi ecosystem. It leverages sophisticated algorithms and market insights to provide seamless order matching, optimal pricing, and strategic liquidity provision across various exchanges. But how does the platform generate revenue? After all, the platform has to devise a system to raise their token's value to benefit its investors. Let's start with the trading engine. This is the core of Reform and includes a range of various algorithms. For now, let's trace how tokens move within the Reform ecosystem and how this can generate profits while raising Reform's tokens price. When tokens are sold on Reform's own dashboard, funds flow back into the bonding treasury. All tokens sold for the bonding treasury are locked for 1 to 5 years. Funds from the bonding treasury, the profits from designated market making, and the profits from arbitrage all flow towards the treasury. The funds in the treasury are then utilized by the engine's algorithm, which performs high-frequency trading and liquidity provision. The liquidity provision for exchanges provides rebates, or fees, for Reform depending on the total volume created. These rebates will flow towards the treasury and will be used for high-frequency trading again. Think of it as a spinning wheel, a continuous cycle leading to generated profits and an increasing Reform's token value. One important thing to mention is that 65% of the realized profits generated from high-frequency trading are allocated to buying back Reform's tokens from public exchanges, flowing back to the bonding treasury. So to summarize, the more projects Reform engages in market making for, the more money goes to the treasury. More money in the treasury means more opportunities for arbitrage and rebates. This translates to increased revenue, which in turn fuels more buybacks of the token. With each buyback, the token supply diminishes, leading to a rise in token price. Additionally, the treasury experiences robust growth as assets are not sold without the community voting for it. This cycle of growth results in amplified profits and subsequent buybacks, further strengthening the ecosystem. But can Reform effectively address the primary issues affecting crypto market making? They're not planning on just playing the game, they plan on rewriting the rules. At the center of their strategy is transparency, which they achieve by operating as a DAO. This ensures that the organization's decisions are approved by a majority and align with investor interests. Not only that, but they employ other methods that ensure full transparency as market makers. Monthly reports. They provide detailed monthly reports on various aspects of its operations, including trading activities, financial performance, and governance decisions. These reports offer stakeholders insights into the DAO, activities, and financial health. Dashboard with trade information. Reform offers a dashboard that displays all trades, providing stakeholders with visibility into the transactions executed by the organization. This ensures transparency in trading activities and allows stakeholders to monitor the project's performance. Clear contracts and terms. They maintain clear and transparent contracts with projects it collaborates with, outlining terms and conditions related to market-making activities, asset management, and liquidity provision. This clarity helps build trust and transparency in its partnerships. No crazy fine prints here, which can't be said about other market makers operating within the crypto market. These measures aren't just checkboxes. They're the cornerstone of Reform's pledge to generate trust and transparency within its community. They demonstrate Reform's commitment to providing stakeholders with full visibility into its internal operations and decision-making processes. The project has also cooked up a bunch of savvy strategies to give their token and utility a boost. First of which are buybacks. It's kind of like a pool of resources kept in reserve for pivotal moments. When Reform decides to execute buybacks, it's a calculated move aimed at strengthening its position in the market. They use some of the profits to repurchase its own tokens from the open market. This has a dual effect, reducing the supply of circulating tokens on the market, making each token more valuable, and showing that the project believes in itself and its own potential, since it invests in itself. This dynamic also resonates across the broader market landscape. The more the crypto space starts to recognize the role of a transparent market maker like Reform, the more projects will utilize its services. This, in turn, funnels a greater stream of funds into the trading engine, increasing realized profits and the frequency of buybacks. Not to mention the limited token supply, as 70% of those will be allocated to bonding and staking, 40% and 30% respectively, leaving no supply available for the first year. During this period, buybacks will have the opportunity to take effect and make their mark as the token price reflects the actions taken by the platform. The supply structure of the Reform token is designed to create a long-term, growing and adaptable ecosystem that supports the success of the project. Benefits from the successes and/or developments of Reform will be reflected in tokens' utility or value. The token also has extensive locking and vesting periods. It should show confidence in the sustained growth of the Reform ecosystem. The fact that Reform operates as within a DAO framework adds significant value for potential partners. If you look at Reform's 3 pillars, you'll notice that they provide incentives to choose their services over other market makers. After all, they do aim to improve the market-making space through accessibility, transparency, and equity. In fact, they're arguably the most transparent market maker in the crypto space. These partnerships aren't just for show, they can be the secret to the token's value skyrocketing. But how would that work? Well, as more projects team up with Reform, there will be increased realized profits and buybacks. This would come as a result of higher trading volumes, more buybacks, and consequently, fewer tokens will be in circulation due to the token lock period. This goes to show that the project has a solid long-term vision, thinking of a business model that incentivizes partnerships, token purchases, and the token that rises in value for all its investors and ecosystem users. Reform's future promises an exciting adventure, driven by its commitment to revolutionize the market-making industry and create a more accessible, transparent, and equitable trading ecosystem for all. Let's take a glimpse into what lies ahead for them. Token launch. Reform has a token launch underway, as it plans to launch its RFRM token to the public soon. This will let more people join the Reform community and benefit from its market-making services and rewards, as well as generate money through bonding. The community will be rewarded by participating in the airdrop through one of the 3 pillars, the testnet, the Discord tier system, or their Galx e-campaign. Market-making partnerships. As we mentioned previously, Reform has devised an ecosystem built around trust and transparency, making their services extremely valuable for potential partners. These partnerships will result in a direct increase in tokens' values purely because of their trading engine. Research and development. A certain portion generated by the trading engine will be allocated for research and development, leading to the introduction of new incentives for both potential partners and investors. Reform has undeniably disrupted the market-making industry. Not only does it demonstrate transparency across the field, but it also exposes the opacity of other market makers who conceal their operations behind closed doors. This secrecy raises suspicions of unethical practices or wash trading. Reform's approach could set a new standard and potentially eradicate dirty tactics used on the dark side of crypto market making, which exploit investors and ruin trust within the community. And that wraps up our video for today. But before you go, we've got a special challenge for you. Head over to the link in the description to take a quick quiz based on today's video. Not only will you get to test your knowledge, but you could be walking away with prize money as well. Don't miss out on this opportunity to learn and earn. Like, share, and subscribe for more Did You Know Crypto content. See you in the next video.